Near the end of 2025, inflationary pressures were easing and growth remained positive, despite market instability induced by tariffs earlier in the year. At the dawn of 2026, the global financial world shared one optimistic dream: the soft landing. Inflation was cooling. Global growth was tracking toward a resilient 3.3%. An AI investment boom promised a new era of productivity. The US Supreme Court struck down emergency global tariffs. For a brief moment, the optimism felt earned. Then, the ground shifted. Conflict erupted in the Middle East, effectively closing the Strait of Hormuz. Overnight, a critical artery of global trade was choked off. Oil prices surged. Fertilizer markets tightened. A brutal supply shock pushed headline figures higher, forcing central banks into a higher-for-longer stance. As tightening dragged on, markets began to scrutinize rising public debt and widening fiscal deficits. In equity markets, anxiety over an AI and tech valuation bubble refused to fade, as stretched valuations and circular investment within the AI ecosystem raised doubts over whether future earnings could justify today's prices. Meanwhile, rising nationalism and renewed trade disputes threatened to fragment global commerce even further, while the risk of new geopolitical conflicts kept global stability on edge. Even gold, traditionally seen as a wartime hedge, sent a confusing signal by falling when fear was expected to drive it higher. Yet, even in the chaos, a fragile sense of stability emerged. A high-stakes summit in Beijing between Donald Trump and Xi Jinping delivered modest agreements, threading a thin lifeline through a fraying global landscape. The US-Iran deal offered another narrow opening for stability, easing fears around the Strait of Hormuz and giving markets a brief sense of relief. But this hope remains fragile, dependent on whether diplomacy can hold and whether the agreement can translate into lasting de-escalation. But the economic toll is undeniable. The IMF has cut its global growth forecast to 3.0%, warning that conditions could deteriorate further, and the pain is not shared equally. While advanced economies remain relatively resilient, the heaviest pressure is falling on conflict-affected regions, commodity-importing low-income nations, and emerging markets. The pristine soft landing is behind us, entering the era of fragile resilience. To help navigate these turbulent currents, we bring together leading voices in finance. Join experts from the National Bank of Cambodia, alongside global asset managers including BNP Paribas, JP Morgan, and BNY Investments. Welcome to the NBC Global Financial Market Forum.